Hi, I'm Baxter of Fairway Independent Mortgage with your weekly market update. So I've got some good news this week, and that is that mortgage rates have stabilized. So yes, rates are up from what we saw a few weeks ago from all-time lows, but still historically very, very good and at excellent levels to take advantage of right now. So why did rates stabilize? There's a variety of factors why this is happening, but one of the things that happened on Friday that was key to helping things settle down with the increase that we saw is that inflation data came out relatively tame. And by tame, I mean relatively low. Inflation came in below 2%, which the Fed likes to see. So why is this good for mortgage rates? So just a little bit about how mortgage rates work. So mortgages are backed by treasuries, by securities, and the ones that back mortgages are called mortgage-backed securities. So mortgage-backed securities, they have, when someone purchases that bond or that investment, they have a set rate of return over, for example, on a 30-year mortgage, it's a 30-year rate of return. So it's a guaranteed set rate of return over 30 years. And if you think about it, let's say, take an example of a 10-year treasury bill that's locked in for 10 years. So the Treasury has been at about between 1.4%, 1.5%, a little bit higher, a little bit lower the past couple weeks. So if a Treasury is at 1.5%, let's say, and someone has that investment locked in at 1.5%, and inflation goes up, so how your buying power with your money goes up, and let's say it goes above 1.5%. So if inflation is higher than the amount of return that you're making on that bond, you're actually losing money each year on that bond. So when inflation goes up, this is a bad thing for bonds. It hurts bonds, and it makes bond yields go up. And when bond yields go up, mortgage rates go up. So people want a better rate of return if they're going to invest long-term like that, if inflation is going to go up. So the fact that inflation came out tame that's one of the factors that caused rates to stabilize. And I just wanted to use this week's market update to explain a little bit why inflation is the enemy of mortgage rates. So basically, when inflation goes up, mortgage rates go up. And the fact that it's still contained, it's still at a reasonable level, it was one of the factors that helped rates stabilize. So that's a little bit about what's going on in the market. I hope that helps you guys out to help understand inflation a little bit better. And if you have any questions about that or anything else related to what the market's doing or any loan-related questions, that is why I'm here. So definitely reach out. It doesn't cost anything to give me a call and pick my brain about anything. Or you can also text or email. So I hope you guys have a great rest of your day. I appreciate you guys watching. Once again, my name is RJ Baxter, Fairway Independent Mortgage. Thanks again.